as you really dig in on a property, talk to the staff, talk to specifically the leasing agents. Where are people going when they leave? Right? That's your true competition there.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Welcome back to Pillars of Wealth Creation. I'm your host, Todd Dexheimer, and I got back on the show again on this Wednesday, Matt Bronner. Matt, how are you doing today?
I'm well. I'm glad I keep getting invited back. I must be saying something smart.
Yeah, well, we like you for some reason, so we appreciate the knowledge you add. Matt, we've been dealing a lot with properties. So we're starting to see, I would say, a big increase. I think I was talking to Zach, our underwriter, and he said he's seen more deals over the last, couple months than he's seen maybe ever. And so we're starting to see a lot more deals. So we're starting to really dig into those deals. And so I kind of want to talk a little bit about that, Matt. Uh, you deal a lot with the underwriting. Is that the case? Kind of what you're seeing? Same thing?
Absolutely. It's this really fascinating perfect storm. And I'm going to kind of talk about it in context of the Twin Cities, our backyard, which is where we are really focused right now. We have other markets, but what we're seeing in the Twin Cities is just this perfect storm. You have some long time generational owners here who they've dealt with a lot of ups and downs. I really love apartments. I really love real estate, but you tend to own real estate in dog years. Like it's a lot to operate a property. Those of you who weren't tuned in earlier, it was Todd and I brainstorming around how we solve all the problems under the sun with our own properties. So you've got a big crop of owners that are done, right? They want to sell. Uh, in our market, there's pockets that have gotten a bad name here. And so you have some institutional investors that have said, hey, we want to get out, even though we think there's tremendous opportunity in the suburbs
Yeah.
here. Couple onto that, a lot of new supply, even though it's being absorbed pretty well, but people got to get out of that new supply. If you're a builder, you don't build to own forever. That's just the math doesn't work. You got to get your fee and then you got to get out. And then there's a lot of people that have been trying to get in. There's some pent up capital. You're getting lenders that are getting more and more aggressive, pushing people out. And so there's something like 5,000 plus units on the market in Minneapolis, St. Paul, which for us is a
Doesn't
ton of
happen.
inventory.
Yeah. Yeah. It never happens. Well, the Twin Cities, and this is the Midwest in general, but the Twin Cities is a market where owners are local and they hold forever. And I mean, we're buying a property from a local owner that has had it in the family since it was built.
He
And
inherited it.
and so it's been decades, many decades in the family. And it just continues to happen like that. And finally, the owner said, okay, we're going to sell it. But you see that a lot. And you said, well, builders don't typically hold their properties. I would say that's probably usually right. But in Minnesota, it feels like they do hold their properties, especially the older generation. I feel like there's a change in kind of how people buy and own apartment buildings. And when you look at the baby boomer generation and the silent generation, they would buy and hold these buildings forever. Like they had no plan to get rid of them. When you look at the younger generation, the millennial and, maybe um, the Gen Xers is the generation that's just a little bit older than millennials. Is that right? Um,
I lost track.
yeah, I lose track, but I think there's a more of an appetite to sell buildings. Buy, hold it for 3 to maybe 10 years, and then sell. And so they're definitely willing to trade more often. I think that's a difference we're seeing. But what you mentioned with this generation is we got these baby boomers and silent generation that are they've had these buildings for a long time. They're getting ready to retire, and they're just like, even though the market's down, they're like, we're going to sell, and they're going to make a pile of money because they bought it for $10,000 a unit back in 1978, right? And now they're going to sell for a big discount at $100,000 a unit. They don't care. Like, sure, would they like the extra money? Sure. They don't care that the market's down by 20%. That doesn't bother them.
Yeah. I think we would be remiss too. It's kind of funny because I actually don't believe things change that much president to president, but people get funny attitudes in our
Mm,
business in
yeah.
presidential election years, right? So I think some of those generational folks might say, like, hey, I want to pay my taxes when I know what the taxes are,
Yeah.
right? It's always the fear of the unknown. We have another market. We've invested a lot in Memphis where they reset the property taxes every 4 years. Now I'm kind of jumping from government to government, but I think it still speaks to the same theme. You talk to the brokers in Memphis, they'll tell you on the year of reappraisal, transactions slow way down
Yep.
because no one knows that data point. No one knows where property taxes are going to go. And so the confused mind says, no, if I don't know what it is, I'm either going to hedge like crazy and take myself out of the deal, or I'm just going to wait until I know what it is. And I think some of that creeps in when you get a presidential election. Even again, I don't think people's finances change all that much, but they're fearful it might. So they act funny.
Yeah. 100%. It's all this, it's psychology, right? It's just all how people perceive things. And like you said, it doesn't change. I think I was talking to somebody not that long ago and they were freaking out about the presidential election. I'm like, what's going to change? Like, really, who becomes president? And it's the first time they listen to this and they're like, no, it's all going to change, but it's like, does it really change all that much? Like, how does your life, it just doesn't. Like, there's so many bigger things that happen in the macro economy that change things more than just whoever takes control of the presidency. Like, that doesn't matter all that much.
Right.
So,
Right.
the big thing that we were talking about, before we started recording was rents and rent comps. And I think rent comps are really interesting. We've got a property we're analyzing that's just really interesting because it's unique and it doesn't match any of the rent comps, right? So it's not a brand new build. And it's kind of in the same um feeling as what a brand new build in this community would be because it's bigger and the brand new builds are bigger. The older buildings similar to this one are all smaller and they're in a far less premium location. This is just a premium location. It's got some great features to the location that these other older buildings don't have. And it's got the amenities that none of these older buildings have, but it's got the amenities that the new buildings have. Right. But so Matt, like, let's talk through, like, how do you look at these comps and what are you looking for when you look at a comp, and is it a true comp or is it not?
I think it's really good to focus here because all of your analysis, these big franchise spreadsheets can change by how you look at your rent comps, right?
Mm-hmm.
And that's why one of the first things when you get a property under contract, what does the appraiser want to talk through? He wants to talk through the rent comps. What does your lender want to talk through? They want to talk through the rent comps. Savvy investors should want to talk through the rent comps because this is the ultimate flow of money in.
Yeah.
And so I like the way you set this up because it's not just, okay, what's a two bedroom here? What's a two bedroom here? You got to take in your specific market. In this deal that we're talking about, there's properties less than a half mile away that you might point to as a comp. No, you've got a river there. We think of it as line of demarcation that totally changes the market. You can go do well on the other side of the river, but that is not the same tenant demographic. So make sure you understand where your tenant demographic is going. And you can do a lot of work piggybacking off the research of others, right? Like we like to follow around retailers like a Chick-fil-A or a
Yeah.
Costco or a Starbucks. They pay people a lot of money to identify population trends. And so if I know I'm within a reasonable distance to them, I can feel really good about my location and my disposable income of my population here. And then I'm also going to look at new supply. And it's important here because that's actually there's established new supply, but there's nothing else coming online. There's no other product. So as we talk through, okay, what's a comp? You're like, well, I got to add a premium here because somebody who's not able to buy their first home, who's getting their first job out of college, where else are they going to go? And we know that most people don't move. There's some crazy stats out there. Like people, their whole life will stay within like a 10 square mile radius of where they were born. So vicinity matters when you're talking through rent comps. As you really dig in on a property, talk to the staff, talk to specifically the leasing agents. Where are people going when they leave? Right. That's your true competition there. Now,
Yeah.
maybe your goal is to change the competition, but follow the footprint of your tenants there. And then you got to put yourself in the mind of a tenant, right? You got to think, okay, if I'm a coming in here with kids, what's going to be important to me, right? The
Yeah.
size, can my kids have a place to play? Am I sharing, if I'm I'm married, am I sharing a bathroom with my kids? If I can get away from that, man, that really matters. So
Are the
you got to be able
schools
to think
good?
like your customer.
Yeah. Schools, what's going on with those schools, right? That's huge too. Yeah. The first part that you mentioned with the river, I mean, that's a big part. Like, what's dividing your property from the comps? I I see people that underwrite and they're using, and this is in OMs all over with brokers, and no offense to brokers, they're doing the best job they can and they want to sell the properties, but they'll have like a railroad track. That's a big one. Railroad track, freeway, just some major land
Bridges.
division, bridges, like all kinds of any major land division, or even a difference in if you're looking at a rent comp and it's a half a mile away, but you've got your neighborhood and then you've got an industrial zone and then you've got the neighborhood on the other side of that's a huge division right there. And those are not rent comps likely on the other side of that industrial zone or commercials. It could be retail, whatever it is, that's likely not going to be the same competition. So I remember Matt in Memphis, one of the first times I was in Memphis looking at properties. We're in this really cool neighborhood called Cooper Young, right? And we were eating lunch there. It was cool. And the broker points across the railroad track and goes, "Hey, Cooper Young is going that way, and you should look at buying there." And so I'm like, "Oh, that's really cool." And we go across this busy road and then across over a railroad track. And the first thing I thought of was when we hit that railroad track, it was like, this is not the same neighborhood. And it was totally different. The AC units were chained down to the ground. It was just crazy the amount of difference in the neighborhood. From feeling like I was in this cool, trendy spot to feeling like, man, I don't feel safe right now being in this area. So, pay attention to those changes. Um, it could look like a comp, but it doesn't necessarily. It's not necessarily a comp. But what the other favorite thing? I was helping a guy out. We were underwriting a deal. He was looking at this broker OM and the unit size. These were all studio units, and the unit size of his apartment that he was underwriting was 300 square feet. Tiny, right? These tiny little units, 300 square feet. And the comps were 600, 800, much, much larger studio apartments. And I'm like, hey, these are just not comps. I'm sorry. But I walk into a studio that's 300 square feet and I can't even figure out where I'm going to put my bed. So totally different. So square footage can be huge too, and the layout of that square footage makes a big difference.
Think you're really smart to focus on that. And I've seen some people go a little bit too far with square footage.
Yeah,
We look at a lot of people like rent per square foot. That is really most applicable, I would argue, in retail and industrial real estate. Maybe if
100%.
you're building like downtown condos, I have yet to see, I've done every job in real estate. I have never seen a residential tenant show up to a showing with a tape measure. If
Right.
any
Go,
of the
hey.
listeners have, feel free to call me out. I just haven't seen it. They know if a unit feels big or if they know a unit
Yeah.
feels small. So you got to compensate for that. But you were touching on some other things that if you really want to get into the nitty gritty of what drives comps, I was thinking, as you mentioned, air conditioners chained down. Your class of property and what will tell you the comps will come down to your roofs, your
Mm,
HVAC setup. So don't compare a property with a nice pitched shingled roof to one with a flat roof. You can have
right.
great flat roof properties. We own them, but just be mindful there.
Yep.
Number two is your HVAC setup, right? Like don't compare a property that has built-in wall ACs to central ACs, or if they've got a boiler, can the tenants control their heat? Or does it
Yep.
just get full blast heat on October and it gets turned off in April, no matter how cold it is outside, right? Because the owner wants to save money here. And then you got to look at parking, right? You can't compare a deal. It's another one we were looking at, another market. It was a big driver for us. We pushed the broker on it. They're like, these are townhomes. We're like, yeah, but a townhome has an attached garage. You just have open air parking here. People care about their cars, probably
Yep.
too much so, but it drives their behavior.
Yep. Yeah. Garages are a huge thing. If your building has a garage versus if it doesn't, there's a big difference there, and you have to account for that. So if you're comping this neighboring property, even if they charge for the garages, Matt, it's still a premium that they're getting for their rents. So if your property that you're comping doesn't have garages, has just all outdoor parking, and this neighboring property has garages, you can't just say, well, they're getting 75 for the garages, we're going to take that off. No, they're also getting a premium on the unit rent just because they have better attraction. They have another amenity that you don't have. And it's just the case. So you have to take, a little bit more off for that. So
You can
uh
also, and this is a part of the strategy, but it can lead to some funny stories. Like you got to double click on the information out there. We've got cool technology in our business. I don't rely on it all though. Like if I want to know what a rent comp is, like our director of acquisitions calls properties.
yeah.
Todd, I think we said we were, a couple one time as we went to a property trying to say like, hey, what do you actually rent for here? But because those leasing agents, they'll start to sing like songbirds if you ask the right questions. Like,
Mm,
okay, well, what's all included in my rent here? What are your move-in requirements? What are your credit screening requirements? What are you giving away right now? All of those will tell you the trends and can maybe highlight a comp or throw something out for you as well.
yep. I remember going to a property, Matt. This was another property in Memphis, and doing a secret shop there. Uh, because we own a property right kind of behind it, and walked into the property. They had really high advertised rents. And as I was walking through, and they said they're beautifully remodeled, all this kind of stuff. And so as we're walking through, they weren't beautifully remodeled. They were okay, but not great. But the rents also fluctuated based on just kind of what they felt like. And so when we were talking, it was like, well, this is advertised at $1,200 a month, whatever it was. But, right now we've got some extra vacancies, so we can get you in today at, 1,100 type of thing. And it's like, oh, okay. So that's you're advertising to, and we do that ourselves, by the way.
Right.
We will have our marketed rent at $1,200 a month, but we say, hey, tell that tenant if they sign a lease today, they're getting it for $1,100, right? And so we do that ourselves on our properties to promote and to get people in the door. Other places do that too. So you can't always look at that. I love that you said that. You can't always look at the rent comps of these tools that are out there. And sometimes they're completely wrong. Like I've seen CoStar reports that say this is a 76 unit building when it's actually a 92 unit building. Like, wait, what?
Right.
So,
And then as you look at where you ultimately fall, and I want to say this, like I'm speaking all these because these are mistakes I've made. So I offer these humbly. Don't try to set the market with your
yeah,
rent comps,
yeah,
right?
that's tough.
Like developers try to do that. They have their own reasons, but like I want to be able to say, hey, look, I've still got margin here. I'm not going to go out and totally change the rental market in this regard. Maybe I think it's possible, right? Like frankly, I think it's possible even with this deal that we're talking about here, but you've got to hedge
Got to be
yourself
careful about that.
accordingly.
Yeah. I have set the market before on both apartment buildings and single family homes, but it's the same thing. You can't underwrite for, you can't assume it. It's great when it's amazing when it happens. I mean, it's fantastic when it happens. We had a property in Lexington that we took over, and we set the rent. We set the top price of property in that submarket's ever sold for. It's great when it happens, but you can't assume that it's going to happen because otherwise when it doesn't, you're SOL. So, um, cool. The last thing I would say too is, and you kind of already mentioned this with the roof type. but the type of property is really important. You talked about townhouses, you talked about the pitched roof versus the flat roof, and you got high rise versus garden style. And so understanding your property type, specific property type, is really important to understanding the rent comps, because they all rent for different amounts, and there's different reasons that tenants want to be a part of each property. So, you look at a townhouse, yeah, why, what are they looking for? They want their own garage, right? They want a place to put their car. They might have a family. They just want their own space. Space is big for them. They want their own place. They don't want to necessarily share a bunch of walls with people, even though they might share one or couple walls, but they don't want this. They want their own entryway, right? They want their own space versus, high rise. Obviously that's more urban and trendy and that type of stuff, or it could be low income as well. And garden style, typically you're looking for amenities, and community and that type of thing. So everybody's got a different reason for renting. So understand what your style is, make sure you're comping those styles.
Yeah, I think it's well said.
Cool, man. Well, that's all I got, unless you have anything else to add.
Your
Awesome.
rent comps are important. Dig in and do the boring work.
Let's get some deals, right? Dig in and get some deals. I don't know what's going to happen here, but I feel like the market is starting to get more transactional. We'll see. I'm hopeful. I'm optimistic that it's going to be. We've been seeing more deals in the Twin Cities. That doesn't necessarily play into our favor, but I think that things are starting to open up. I'm hoping that's the case. So,
yeah, it's some of the stuff we were WhatsApping about. In the economy, you always see things in the rearview mirror. What I'm really interested is if people have followed some of the major players in real estate, like Blackstone and KKR just made multi-billion-dollar purchases. Yeah. And I'm stealing this, so please don't credit me if you think it's smart, but during a downturn, to reach the bottom, you need somebody to plant a flag and say, yes, now is a time to buy. And we've heard from a lot of brokers that, look, it does trickle down. You need institutional equity to come back and start making these purchases. And you're talking about multi-billion-dollar purchases. So it'll be interesting to see if these are the pivot points over the last 3 to 4 months when these purchases have happened.
Yeah, good point. Well, Matt, appreciate it. Thanks a lot again, and you have a fantastic rest of the day.
Same to you, sir.
Hey, thanks so much for listening. I appreciate you being a loyal listener. I would love to have you go on to our Facebook page and subscribe. Give us a thumbs up. Go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. But your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.